Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, this is going to be an absolute phenomenal video breakdown. We're going to be going over some video clips from one of my most favorite macro investors, Raoul Pal, and then also covering some things that we've discussed on the X space, telling you guys to be paying attention to via dollar weakness, the fundamental data that came out this week most recently, and the strength of the overall cryptocurrency market and risk assets as a whole. With that being said, if you enjoy these in-depth video breakdowns, giving you guys some phenomenal insights to be paying attention to, do us a favor, smash that thumbs up button and subscribe to the platform so that way you don't miss out on any further video breakdowns. Also consider heading over to the X space and following us on X so you can get some of these updates that we're going to go through and read today. So I'm just going to play a real quick video clip of Raoul Pal just a couple of months ago mentioning that seeing a 30% correction in a bull market is healthy, and how this is going to play an important factor in some of the information that we've been giving you all publicly on the X space. Take a second and listen.
So I think where we are in the crypto market is we're in late spring. And late spring is when it starts to get really interesting. It's not a one-way bet. We will have periods of consolidation or, sharp sell-offs. It's very normal to see a 35% correction in a crypto bull market. But spring is just the start. We've got summer to go and even into fall when the weather's still good before things turn again. So we've got a couple of years ahead of us of life-changing opportunities in one of the biggest macro trends of all time. And what's great is how people still don't yet get it. And they don't yet believe in it. And they don't yet understand it. And that means we get to be first. Even if you're the class of 2012 like me, or you're the class of 2023, you will still be early. And the opportunity is ahead. This is what Dan and I think is the big macro bet. Maybe the biggest macro bet of all time.
Now, as the vast majority of you know, we just most recently witnessed a flash crash in the digital asset space where Bitcoin in one candlestick dropped over $9,000. The vast majority of individuals, most likely in the retail space, reacted impulsively and emotionally. Now, inside our private CYPRX community, we kept our calm. We even projected this potential pullback and crash ahead of the curve, where we mentioned to our private CYPRX members, I myself personally said, I wouldn't be surprised if we saw Bitcoin wick above its previous all-time high before seeing a flash pullback. Now, inside our private CYPRX community, you can see some of our members even stated things by saying, it's so funny. All the other discords that I used to be in are panicking, but we here know exactly what is happening. Now, that leads me over to this post that I just released to you guys where I said, why don't we trade off of impulsiveness and emotions? You need to understand that your emotions are not always reliable, and generally they influence you to reach decisions regardless of facts. Before being influenced too far by your emotions, give your reasoning faculty, i.e. your head, a chance to pass judgment on the trade or investment opportunity at hand, whatever it may be. The head is always more dependable than the emotions, i.e. the heart. The person who forgets to invest and or trade by this rule generally lives to regret their neglect. Now, why am I reading this to you all? Why is this important? Let's play some further video clips, really truly understanding via what is taking place in the market right now. You need to grasp the concepts that the smartest people in the world right now and the largest financial institutions are taking up a keen interest in this space, adopting these digital assets and investing in the cryptocurrency market. Take a second and listen.
And so people, the smartest people, always drift to where the opportunity is the greatest to make the most amount of money. And, that's why I think, especially being in the world we're in with digital assets, the smartest guys I've ever are in this space. Now, people under 35, all of them understand that this is the future. And people over, 60, 65, they still don't quite understand it. They don't believe it. On Twitter or X, there's a lot of talk about doing the work.
Now that you've heard individuals confirm that the smartest people in the world are heavily invested in this space, and in previous video breakdowns on the CYPRX platform, what have we showed you? large market participants, and systemically important individuals telling you all that crypto is not going away. For example, the director of the IMF openly stated in November 2023 that they're not here to implement regulations in the digital asset space to crush crypto, and that crypto is not going away.
Takes us to look into the future. We must consider the effects if crypto assets become widespread. The scenario is not far-fetched. They may. For one, they are certainly not going away.
Take that into consideration by understanding that this is an up and emerging asset class. So of course there's going to be volatile price swings to the up and down side. But zoom out and understand the long-term trajectory of this market. Now, I want you guys to really truly listen to what Rob Paul says here. He goes on to confirm that every single time that the market dips should be seen as a buying opportunity. Take a second and listen.
No, and also you and I learned a new trick, which was that we realized that this was a long duration asset and you need to have a longer time horizon than was traditionally macro.
Yeah.
And we both had to learn that trick. You have to learn it. It's hard, but you learn it, and you learn, as you're doing now, is if you've got a long duration, you should be buying in the sell-offs and not selling.
So here at CYPRX, we take that same strategical approach. In a previous post on the X, just to show you guys how accurate we are here by analyzing fundamentals and technical analysis properly, and then applying that logically to the markets by entering in at a discounted price, we stated to you guys in a previous post that the ideal scenario that would favor the suppression of the dollar below the 103.800 level and potentially decline towards a lower 103.00 psych level would involve downbeat ADP NFE numbers, JOLTS job openings missing the market forecast and or falling below previous readings. Couple that with a dovish tone from Jerome Powell. Now, within our private CYPRX community, before the flash crash and before putting out all of this information to you all as to what we needed to see a further improved risk on market mood and dollar weakness, we had put out a handful of dollar cost average levels within our private community. Here you can see another post from within our CYPRX monthly membership, where we said that the vast majority of the levels we shared with the CYPRX private community members on Saturday, March 2nd, regarding our personal designated areas of interest for dollar cost average levels, all mentioned 3 days in advance, are currently now yielding profits. We have a whole list, AGIX, ICP, HBAR, Quant being some of them, right? Overall, across the board, 129% gains. Why am I showing you all this information? Because again, if you're not part of a community that's giving you all consistent value and instead is trying to fear mongrel you, you need to understand what opportunities you are missing out on. Now, fast forward, what did we see in the market today? I'm going to read a full fundamental breakdown again that we give to the CYPRX community members, explaining to them what took place. So remember, in a previous post, we told you guys that ideally what we wanted to see was downbeat US data and a dovish Federal Reserve sentiment. And today we got exactly that. Risk assets across various markets have bounced back from their recent downturn, notably with Bitcoin witnessing a staggering drop of over $9,000 in just one candle. In our previous analysis, as mentioned, we highlighted the necessity of downbeat data and dovish comments from the Federal Reserve to sustain the weakening trend of the dollar and foster a positive risk sentiment in the market. Today, what did we get? The dollar index, or the DXY, started on a weak note, sliding by negative 0.32% and hitting a 1-week low. This decline was specifically spurred by the disappointing US February ADP employment report, revealing that companies hired fewer workers than anticipated, thereby signaling a dovish stance in Fed policy. The dollar's decline further deepened following remarks from Fed Jerome Powell, who hinted at the likelihood of initiating a reduction in borrowing costs at some point this year. Additionally, the surge in stock and crypto market strength today has diminished the demand for the dollar as a safe haven asset. We also had key economic indicators for the US today, including the February ADP employment change, which rose by 140,000, slightly below the market expectation of 150,000. So remember, in the previous video breakdown, giving you guys a fundamental trajectory to be paying attention to for increased risk on market mood and an improvement or recovery in risk assets. We gave you guys all this information in advance. Again, here at CYPRX, we take advantage of discounted opportunities by understanding when they're going to potentially take place and capitalizing on market opportunities when the market is discounted, just like Raul Paul, a seasoned investor, told you guys, right? So just take that into consideration, just showing you all how real of a community we are here. No hype, no gimmicks. We're not giving out $100, $1,000 price projections on XRP. We're trying to educate you all so you all can take advantage of these massive opportunities that are at hand in the now. Moving on. I want you all to take a second and listen to what these gentlemen talk about, how right now these large organizations are, for the first time ever, starting to wake up to this digital transformation.
Have lost huge amounts of purchasing power who have not moved into this world. And again, that's the risk, I think, of the TradFi people of not moving in, is that their wealth, the value that they have, continues to erode. And we've talked about this again before, that I think that instead of a debt jubilee or debt problem, what happens is that debt just very slowly sits in the traditional world and devalues versus everything in the digital world. And so you have the digital asset ecosystem that's debt free. And so it's a pure market, it's clean. This right now is the beginning of the normie, traditional corporate world adoption of Web3, blockchain, crypto, digital assets, whatever you want to call it, it's happening now. At the end of the last bear phase, we didn't have hundreds of companies like trying to figure out how to like incorporate NFTs into their business model. Now you've got Adidas and LVMH and Nike and all these giant companies on that end. You've got Franklin Templeton and Fidelity and BlackRock. I mean, the buying hasn't happened yet, but they put down their stake and they've said to the people in Washington, listen, we control trillions of dollars of assets. Okay, we want an ETF. All right, so that's great. But that's just a conduit for capital. Can you imagine what's going to happen when the people at those institutions understand that that is just the very beginning?
So with that video clip in mind, take into consideration that the vast majority of these large organizations and financial institutions have no capital allocation into this space at all. Right now, the digital asset space currently sits at around $2.5 trillion. There is so much upside potential. Again, obviously, of course, you need to make sure that you're putting in the work. You need to make sure that you're doing the research. You need to make sure that you're taking into consideration and assessing your own personal risk tolerance. However, individuals, again, in my personal opinion, that are sleeping on the opportunities at hand to capitalize on massive, massive amounts of wealth are absolutely sleeping on their own potential. Another thing that these gentlemen capitalize on is thinking long term. Take a second and listen.
That are all going to come together because everyone's been building them and you see it because you've been investing in this. Most people can't see it until it's in front of their faces, but we all know what's coming because everybody's been working on this shit forever.
Yeah, and it's still early. I mean, honestly, I'm surprised at how early, but it's still early. I mean, the space today, and this is incredible, has, I would say, between $2 and $2.5 trillion of value in it. Anyway, so after having experienced that a bunch of times, you realize that if you really want to build wealth in this space, you have to buy something that you can hold for 10 years. Whatever.
The gentleman goes on to say that you should be investing in something that you can hold for 10 years. The vast majority of individual retail investors in the space are here for quick fix gains, trying to get 1,000 pumpage on meme coins. And I get that, right? The fast-paced money that you can make in this space. But here at CYPRX, we are invested in the space for the long term. If any of us involved in CYPRX want short, quick gains, then what do we take advantage of? Leverage trading on an intraday account, i.e. capitalizing on these day-to-day price swings. But if you're not here for that, and you understand this technology and what it's going to do for the global economy and the whole entire world as a whole, there are massive opportunities to be made. Sometimes it just takes you as an individual to zoom out and see the bigger picture. The last couple of video clips is going to confirm some things that we've talked about in previous video breakdowns, that those individuals, including large financial institutions and organizations that do not adopt these technologies, will most likely get left behind. That is why when one of these large financial institutions adopts digital assets and starts to implement them in their back-end infrastructure, the vast majority of these financial institutions will then follow, because they know that if they don't, they will get left behind. They will not be technologically savvy enough to keep up with this modern, fast-paced world.
What kind of investors are you seeing now? Is it still family offices predominantly, or are you starting to see finally the institutions coming in?
Yeah, so I would say that for most of the year, and again, I've never traveled more than I have this year. Crazy travel schedule, but mostly larger family offices. But in the last 3 weeks, all of a sudden, people who had said they would either come into the fund in January, or who were, crypto, blockchain, whatever, not a priority, all of a sudden want to have meetings. And so it actually just started in the last few weeks. And I mean, very, very large institutional people that haven't, okay, this is important, that haven't invested in the space at all. It's the same thing when I say to people that, there's $2.5 trillion of value already here. They just can't believe, like, what's it doing there? I still get questions routinely. Now, they're proclamations from people. There are no use cases. This is all still speculation. Look, those people will be left behind.
As always, many blessings to you guys. Do us a favor, smash that thumbs up button and subscribe. Again, showing you guys the devil's in the details here at CYPRX every single time that the market is discounted, and it presents further opportunities to capitalize on some good price entries in this market. Here at CYPRX, we take advantage of that, and we've been trying to give you guys things to be paying attention to, both fundamentally and technically, publicly on Twitter and YouTube. If you guys want further insights, definitely consider joining our CYPRX monthly Discord. We'd love to have any motivated individuals on the team that are looking to progress in their investing and trading career, find educational value, and connect with other highly motivated, like-minded individuals like yourselves. As always, many blessings to you guys. Keep your head up out there. Make sure that you're doing your own personal research, assessing your risk properly. And with that all being said, I will see you guys in the next video breakdown.